Auto stocks are under pressure today, particularly M&M. Now, SIAM has projected just a 1 to 2% growth for passenger vehicles for FY26. To discuss the impact on these companies, we have with us Kale, Senior Vice President Research at Elara Capital, now joining in. Jay, first, for the benefit of our viewers, give us a synopsis of what came out of the SIAM meet and what stood out for you.
Yeah, I think, they have this yearly conclave, looking ahead conclave, where they give the growth guidance for FY20 the following year. And over here, I think, passenger vehicles was something that stood out. They've guided for a 1 to 2% growth rate for FY26. Now, broadly, us as well as the street probably would be in the range of 5 to 7% for FY26. So this did come in a little lower than our estimates. Of course, these are initial estimates, and then they kind of, get updated during the course of the year. But at least to start off with, that has been a little bit of a lower than estimate growth rate guidance that they've given. For two-wheelers, it was pretty healthy at around 8 to 10%. And CVs was also decent at 4 to 5. Those were largely in line with estimates. But I think passenger vehicle is something where some bit of a lower than estimate guidance came in.
So Jay, let's talk about passenger vehicles because that's where the miss is. Versus estimates of 5 to 6% growth, we're now looking at 1 to 2%. Now, individual companies also shared how they see FY26 progress. So where do you think, which companies, according to you, in the passenger vehicle space sounded most downbeat? Or where is the miss versus expectation when you drill it down to individual companies?
Yeah, I think, you did have the industry growth projections given by companies. Obviously, companies wouldn't speak about their own growth aspirations or growth projections in this forum. But industry growth, 1 to 2%. Broadly, what was expected is, the first-time car buyers, street were expecting them to come back in FY26. Now, if the industry has to grow in a meaningful way, it has to be led by first-time buyers coming back as well. Now that the growth expectation is 1 to 2%, probably the comeback of first-time buyers may not be as strong as what one would have earlier thought, and probably there's a more delayed recovery. Because mind you, this percent growth rate of FY26 is marginally lower than what probably they would end at in FY25, and we had thought that things should accelerate in FY26, but that doesn't seem to be the case, at least as of now. Of course, SUVs are expected to outperform. That was the broader thought that the trend of SUVs led by new launches. I think most of the launches are going to happen again in SUV space in FY26, like it was in the last few years. So that segments would outperform. But the first-time buyers, the expectation is that it will still remain a little muted.
Jay, talking about the four-wheelers, continuing to talk about the four-wheelers. First up, do you foresee further decline as far as EPS estimates are concerned, because you said that it's not in line with what the street was anticipating? So do you expect downgrades to come? And along with that, do you also anticipate some multiple cuts coming in from sell side, especially when it comes to the passenger vehicles, names like Maruti, Hyundai? And secondly, SUV makers, where does your preference lie?
I think, as far as estimates goes, we'll have to see how things pan out, because obviously these are initial estimates. If we've analyzed last 10 years CM projections versus what actually happens. Of course, there have been years of COVID where obviously things would go haywire, but there has been a 40% odd hit rate in terms of estimates coming, actuals coming in line with the estimates at the end of the year. So, we'll have to see how it goes. Of course, in the last 2 or 3 years, they have been bang on in terms of what their estimates were and what actually panned out. Initially, probably not immediately, I may not expect earnings, but definitely if this 1 to 2% becomes a reality in the next 3 to 4 months, as we see the growth rates panning out in the start of the FY26, then definitely there could be some cuts. But at least as of now, I don't see immediate cuts from the street.
The stock which everyone's watching, Jay, is M&M, because Tesla's firming up its India plans, intensifying competition in the premium EV space. Early days right now, but what would your thoughts be? And if you had to take a position on the stock based on how this may progress, what would your advice be?
I think still early days, there have been multiple, I think in the last 1 or 2 years, probably one of the maximum amount of news flow has been in terms of Tesla entering. Of course, this time around with Modi also interacting with them. We'll have to see how it goes. But Tesla's price points also we need to see at least the current price points of Tesla, even if we take lower duty, are decently high and meaningfully higher than what the price points of M&M, Tata Motors, Maruti, etc. are. We'll have to see what models they launch in India first. If it's Tesla Model Y, S, X, or then we start off from Model 3. So I think it's really early days to really take a call on that. Currently, we have an accumulated rating on Mahindra.
Jay, lastly, when it comes to the MH and CV space, what do you like over there? And two-wheelers, where does your stated preference lie?
Yeah, so we are very cautious on the M&HCV cycle. On two-wheelers, our preference remains TVS followed by Bajaj.
Thank you so much, Jay, for joining us, giving us a sense of the outlook as far as the passenger vehicle, two-wheeler, as well as the M&HCV space is concerned. Well, let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.